Welcome to RANsquawk's morning briefing for March 2nd, 2010. In terms of so far what we've seen here in London, we've got marginally positive equities. FTSE CAC Index coming up 0.2%. We just kept Bund futures down around 3 to 4 ticks at the moment since the open. In terms of the Greek situation, not too much new to report as yet, as most of the market now looks ahead for further comments out of Greece in terms of extended austerity measures they're due to lay out, which could come as soon as tomorrow, but not more likely towards the latter parts of the week into next week. In terms of the debt agency chief, he's also said they're under no pressure in terms of issuing that new bond, as the market is still awaiting as well that €5 billion in the 10-year to be issued. So consequently, in terms of the spreads and so forth, they've not changed too much. The credit default swaps also holding pretty steady compared to yesterday's levels. One underperforming equity index at the moment, though, is the SMI, as the largest stock there. Novartis has gone ex-dividend today. In terms of some of the news flow of note on the Wall Street Journal website, they report some comments out of Fed member Plosser, who said the Fed should remove the extended period from the FOMC statement. Plosser saying he's never been entirely comfortable with that language. And taking a look elsewhere in terms of currency moves, the pound has been under a bit of pressure early doors again today. We are trading at the moment in cable below the 149 handle. A lot of press coverage in terms of the hefty fall we saw yesterday that was partly linked to that FX flow from the move that AIG and their Asian assets are being sold to Prudential for $35.5 billion. Also as well, further polls ahead of the forthcoming UK elections have been released this morning, both indicating as well that the hung parliament scenario is becoming ever more likely. In terms of other things as well, overnight we've seen the Reserve Bank of Australia, as expected, they did hike interest rates by 25 basis points to take the key cash rate down to 4%. In particular, the Governor Stevens also suggested that it could be further rate hikes to come as we head on through the next few months. In terms of the actual data we're looking out for, out of the Eurozone, we're looking for the CPI estimate. That's to come at 10 o'clock London time. No real major data, no 130s from the US today. However, we will be looking out for the Bank of Canada interest rate decision, where most analysts do anticipate the BOC to remain on hold at 0.25% in their rates. And then for energy traders, we'll have the API all inventory numbers and be after the 9th pick close today.